Later CPA and Associates, accounting done great by mate.
Hi there, I'm Daniel Lader, founder of Lader CPA and Associates, and welcome back to our ongoing series, Tax Strategy, right here, right now, where we are talking about great ways to reduce your tax bill and skipping all the jargon. This week, we are talking about hiring your spouse or parent in your business and the benefits associated with that. Now, this can be a smart strategy, but only if the work is real and if it's set up with purpose. The main idea is really simple. You are not paying family members just because they're family. You are paying them because they actually help the business. Now, when this is done correctly, hiring a spouse or a parent can help you with shifting income within the family, creating access to more employee benefits, building retirement savings faster, and improving your business records, and paying family members fairly for work they already are doing. We all know if you have a small business, your family is helping you somehow. But this is not a fake deduction strategy. It has to be treated like a real job. The first rule is that a real job has to have real duties, such as, and these are just examples, scheduling, billing, bookkeeping support, answering the phones, helping with marketing, filing paperwork, or cleaning or office support. Now, the pay also has to be reasonable. So ask yourself this question: would I pay someone else this amount to do the same work? If the answer is no, the pay might be too high. You should also keep basic records like a job description, time records, payroll reports, and proof that the work was done. So let me give you a critical thinking question. If the IRS asked what this person does for your business, could you explain that clearly? Now, when you hire a spouse, this can be useful, but it's often misunderstood. For couples that are married filing jointly, paying your spouse usually does not create a huge income tax savings by itself. This is not like hiring your kids. Different type of strategy. Now, this is because both spouses are often in the same tax bracket. So the bigger benefit may be creating more access to retirement plan contributions, health insurance benefits, medical reimbursement arrangements, other employee benefits that you have active. Now, for example, if your spouse is helping with admin work every week and you're paying them through payroll, this gives you the opportunity to give them retirement contributions as well. So that allows you to make more retirement contributions in total. Now, remember, again, the work needs to be real. Now, let's talk about hiring a parent. Now, this strategy is a little similar to when you hire your kids. Now, this allows you to shift income from yourself at a higher tax bracket to a family member who is in a lower tax bracket. Now, a parent can do similar types of work: office organization, data entry, client follow-ups, cleaning, just to give a few more examples. Now, the business will get a deduction for wages, and the parent reports that wages as income. So be careful. If the parent is receiving Social Security, Medicare, disability, or other benefits, extra income might affect them negatively. That should be reviewed before putting them on payroll. Do not create a bigger problem just to chase a small tax benefit. Now, when we're hiring a spouse or a parent or other family member, a lot of people focus on the income shifting. That may or may not matter, as I told you before, when you hire a spouse. But sometimes the bigger opportunity is the benefits you're creating greater access to. When a family member becomes a real employee, they may be able to participate in certain employee benefit programs. And these can include the retirement plans. Think the 401k or simple IRA or SEP IRA. They can participate in health plans or reimbursement plans for health expenses. Now, these plans always have rules. You cannot just assume that hiring a spouse or parent qualifies them to be treated as an employee. Sometimes, depending on the benefit, they'll be treated like you as an owner. So keep that in mind. This type of strategy is one that takes a lot of planning and forethought into what kind of benefits you want it to apply to and benefit you on. Now, remember, keep your documentation and keep it clean. If you hire family, you should keep a written job description, a reasonable pay, time records, payroll records, proof that they're doing the work, all to satisfy the IRS's requirements if they choose to look deeper at that. Do not just make this as a year-end adjustment. Do not just pay random amounts. Do not put someone on payroll if they are not actually helping the business. The stronger your documentation is, the stronger this strategy works. A couple closing thoughts to leave you with. Hiring your spouse or parent can be a useful tax planning tool, but it is not a shortcut. The goal is not to invent a new deduction. The goal is to pay family members fairly for real work and then use the tax and benefit rules correctly. Done right, this can support the business, help the family, and create more planning opportunities, but done wrong, it just creates more payroll problems and more payroll taxes. It has weak deduction and it creates additional IRS audit risk. So do it right with forethought and planning. Now, is there someone in your family who is already helping your business? And should that help be treated more formally? So next week, we are talking about the Section 127 Education Assistance Reimbursement Plan. So don't forget to like, follow, and subscribe for future events and tax advice. Visit our website at latercpa.com. Have a great weekend. Keep helping others to help themselves, and let us help you to do just that. I'll see you next time. Bye.
For all your tax needs.